Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be doing a macro analysis. I want to talk to you guys about the dead cat bounce that I believe we saw in the equity indices today. If you don't know what a dead cat bounce is, you will learn soon. But right off the bat, that does imply that I do see more downside ahead. So we'll kick it off on the charts with the SPX or the S&P 500 and the NDAQ or the Nasdaq. Again, I want to talk to you guys about my downside price targets. Try to rationalize this price action that I am foreseeing for you guys. And then after that, we will move on to the hedge. That is the VIX or the CBOE volatility index. If the S&P 500 goes up, the VIX goes down, and vice versa. The VIX is meant to be a direct hedge to the S&P 500. So that's why on today's bounce, the VIX got absolutely smoked. It tracks volatility. But again, because I do see more downside ahead for the S&P 500, I am pretty bullish on the VIX, and the chart actually looks pretty solid to me as well, which again, as we dive in, you guys will understand why that is. After the VIX, which again, while we cover the VIX, we will talk hedges as well. I want to talk to you guys about how I'm personally keeping my portfolio safe in the case that we do see more downside. Shout out to the newsletter group. You guys know the drill there. Even though my hedge plays got absolutely clobbered today, I double down because I'm confident in the general trend direction over the coming trading sessions, okay? So we'll talk hedges as we cover the VIX. After that, we will move into the DXY, the DXY, or the US dollar index. This pretty much weighs the strength of the US dollar. So this is the US dollar weighted against a basket of other international fiat currencies. The reason this is important, and the reason this is where in the charts, kind of this middle ground of the overall analysis going down the watch list, I will do my best to tie in some of my fundamental thoughts around the equity markets, try to rationalize some of my bearish sentiment for you guys as we cover the DXY. Because the general trend direction of the US dollar, of the DXY, will have somewhat of an impact on the entirety of the markets, everything that trades against the dollar, which is pretty much everything. So we'll cover the dollar. Dollar's looking a little funky right now, but does look like it can bounce. You guys will understand why that is once again as we dive in. Then move on to silver, not covering gold today because you guys know I'm more bullish on silver when it comes to precious metals. More exciting price action potential. Silver looks very clean on the charts, looks very shiny on the charts, looks like it has some potential, and especially if the tech sector of the market, which is primarily the S&P and Nasdaq are very tech weighted at this point because they're weighted by market cap. We will cover silver because I do think silver's capital, still wants to be put to work in this market if tech does sell off. Silver is one of the legacy safe haven plays for a reason, and I do think based on the technicals and overall fundamentals, silver, as far as sectors within the market that could see some green, is pretty well poised. Silver and gold did very well last summer, and I do think we could see history rhyme a bit with that one. We'll then close it out with, first off, a name that we have not covered on the channel in a very long time. Good old TSLA, Tesla. I mean, Tesla, you guys having a rough day today for obvious reasons. If you guys watched yesterday's video, you would know why that is. But Tesla, the reason I want to cover Tesla, also kind of tying in some of my fundamental arguments, is not only to show you guys Tesla, because Tesla did break a pretty significant area of support. Tesla looks very bearish technically right now, but also to give you guys my thoughts on the risk on sector of the market. So risk on, I'm sure many of you guys know what that means, but risk on being the names in crypto, in EVs, and biotechs that we love here on the channel, the revolutionary sectors. Risk on and revolutionary are pretty much the same thing. And I love these aspects of the market, but they've just been ripping so hard, primarily through retail investors and retail interest, that as these sell off, it worries me that, like what we just saw, honestly, you guys, in Riot and Mara, once these start to sell off, it's just kind of that domino effect, and they just keep bleeding out. So I want to talk to you guys about Tesla, kind of the risk, my thoughts around the risk on sector of the markets right now, and then close it out, of course, with BTC. Bitcoin looking pretty good right now. Again, this chart as I record these did only cycle about an hour ago, but Bitcoin sitting above 50K. Love to see that, to be honest, but just looking at the charts, you guys, I'm sticking to what I've been saying for the past few days. I do perceive more downside ahead for Bitcoin just until my targets are hit. A lot of this goes, you guys know I'm a swing trader. My day-to-day, although I cover things on a day-to-day basis, I stand strong in my price targets and the price targets I set until I'm proven otherwise on the charts. And right now, Bitcoin, although it's up right now, it's in the green. I love to see it above 50K. I do still see a bearish short to medium term price action for Bitcoin. Okay, so we'll close it out with Bitcoin. I want to give you guys as much Bitcoin updates as I can on a somewhat of a daily basis, as much as I can whenever I'm recording a video for you guys focused around crypto or the macro. And again, because the price action of Bitcoin will ultimately dictate the general price direction of many of the crypto plays that we talk about a lot here on the channel as well. So those are all the names we're going to cover. Super excited to talk technicals with you guys. Although I'm bearish, again, always here for you guys to record a video. So before we do dive into the charts, I do want to kick the video off by reading this guy. So this is just the very intro, like the very intro, not even going to scroll down here, but I want to read through this quickly and then just kind of rant a little more about my thoughts fundamentally around the markets as we before we dive into the charts. Okay, so it's a bloody Thursday in the markets, guys. The crypto market continues to melt, and although the equity indices, the S&P 500, Nasdaq, and Dow Jones are putting on the facade of a comeback over the course of the trading day, I still believe there's more downside ahead. Dead cats are especially brutal zombies on Friday, so I'd be like that one. I think I'm gonna throw this guy in the thumbnail, that little smirking cat. Once all of this carnage is over, I'm excited to dump some cash into some of my favorite plays again. Being a bear is not nearly as fun as being a bull, but it needs to be done sometimes as a trader. So I don't know why my videos have been getting so like a staggering amount of dislikes lately. I don't know if it's because I'm just gradually becoming a more unlikable person. If that's the case, sorry about it, or if it's because my bearish sentiment. You guys, trust me, I love being a bull. Being a bull is awesome. And it's awesome that we experience the bull, like such insane bull rallies, like 2xing our money pretty much every single day for a pretty significant amount of time. Obviously, things have changed over the course of the past couple of months. But again, you guys, that's the reality of the trader, of being a trader sometimes. I'm a very optimistic human in most aspects of my life, in almost all aspects of my life. But as a trader, as a self-proclaimed irrational individual, sometimes it's primarily on the charts, which is why we spend so much time on the charts now, because technicals do rule this market. You have to be rational, and especially for you guys, because I have a following. Like, being a bull is fun. All the YouTube channels out there who are just constantly bullish do better, do way better. It's way, like, people love being bulls, especially in this current market environment. There's a lot of new retail. I remember when I first got into crypto, you make a bag, you make some money, you make a little bit of money, you make your first chunk of change. You're educating yourself. You believe in the fundamental prospects like Doge. Like the fundamentals behind Doge are amazing. On a real note though, like Bitcoin, like people are educating themselves on Bitcoin, understanding why Bitcoin's important, and you want to be a bull. And it seems so obvious to be a bull, even after the things like 10x'd in the course of a year. So again, that's the important part right there. You just have to stay rational, and it's hard to stay rational when your head is in the clouds and you're making money. But again, I do think things are slowing down a little bit. And again, I don't like to be a bear, but I'm sharing these macro analysis too. Like, I know it's not as fun to listen to just talking about equity indices and the macro and the US dollar and silver. Like, that's not as fun as talking about Riot Mara, like ALY, these things that have 5x'd our money in a few weeks. But that's the reality, you guys. That's the market. That is cycles. I've been through so many bubbles and pops before and slow times, and that's just life. And if you want to be in this game for a long time, this is very important. So again, thank you for attending my TED Talk. Let's get into the video. But before that, as always, I will ask you to please give the video a like too. Again, because I've been getting so many freaking dislikes, and to just boost my self-esteem a little bit. So for selfish purposes, please give the video a like. Makes me I've been a little bummed out to post, not bummed out, but definitely less excited to post videos, just knowing that's probably gonna get a decent amount of dislikes. Continue the trend, continue the bear trend, I guess. But give the video a like if you do go on to gain value from it today. Really appreciate that. Subscribe to the channel if you're new around here and want to catch more content like this. And of course, check out the complete portfolio daily newsletter. First link down in the description. That's a complete breakdown of my entire portfolio. Calls, puts, stock positions, cryptocurrency positions, of course. Every day, I update that during market hours, letting you guys know what I'm trading, why I'm trading it, and the why is in the newsletter. So again, this is just the very beginning of the newsletter. We go on to just look at some charts and stuff, just give you guys an idea of what that looks like. But yeah, that's $15 a month. It means a lot if you guys check that out. Do that every morning. And also the Discord, straight up right now, I realized that I'm an absolute idiot and forgot to activate the promo code that I gave you guys yesterday. If any of you tried that and failed and were like, wow, this guy's dumb. I am. But I did activate that now. So if you want to join the Discord, tomorrow, Fridays are for the fam. So I do not make updated videos Fridays. Saturdays, Sundays are usually from Thursday to Sunday is usually kind of my break, at least as far as updates go. But I'm in the Discord pretty much every day, chop it up with you guys, do a Q&A. And then on Sunday, we're going to do a little live stream Q&A where I mirror my screen, do exactly this, but for you guys live and do some Q&A and stuff. So YouTube 15. Just YouTube 15 straight up. If you want $15 off of that, it is 100% active now. Sorry about that yesterday once again, but this link will also be down below as well. Appreciate you guys checking that out. Really supports me and supports the channel. Let's get into the charts. So the S&P 500, the good old SPX, is kind of sticking to what I've been expecting it to do. So on the 4 hours right now, this is what I believe is the best candles for gauging short to medium term time horizons. But dead cat bounce. So let's cover the dead cat bounce first, because that's kind of like the theme of this video that we saw in the equity markets today. Dead cat bounce is when something falls off a cliff like this. We'll see the same thing in Bitcoin at the very end. Dead cat bounce, you fall off a cliff and then you bounce hard. So just think about a ball, like just general basic physics. You drop a bouncy ball, and the higher you drop it, the higher it's going to bounce. So because the S&P fell so significantly, this is a pretty, like, for an equity indice, especially the scale of the S&P 500, this kind of dump is pretty impressive. So it's not surprising that today we saw an impressive bounce. So we bounced pretty impressive. I still stand by my price targets. That is a dead cat bounce. That's why it's a dead kitty, poor kitty. But I stand by my price targets. These I have not changed this arrow since this initial fallback kind of down in this area right here. Since we tested resistance here, actually, I thought it was very likely that we would ultimately come down to the bottom of what is kind of this channel, test overall support. So I'll zoom out after, let's just zoom out right now, obviously. So this right here, very strong line of support since since October. So over half a year now, almost getting into a year. This year's going by fast, but very strong line of support here on the overall uptrend beginning October. Boom, touch point here. It's very likely that this line of support will come into play. So my first price target, if we hit this tomorrow, because I do think it's possible we do dump tomorrow. Again, considering it's Friday, traders are going to want to exit their positions prior to going into the weekend. The macroeconomics, like from a fundamental perspective, are getting a little sus. Yields may rise. Interest rates might go up as well. So things are a little like waters are definitely sketchy right now. We just faced a major sell-off this week, and all of these things, in my mind, lead to more downside, especially on a Friday. So Friday, which is going to be the 14th, if this happens tomorrow, this would take us down to about $4,022. If we break tomorrow $4,020, to say conservatively like $4,010 in the S&P 500, my next price target is going to be the high, which I think is very likely. I honestly think it's super likely. I almost want to get rid of that and just go like this, just because I think it's very likely that we ultimately come down in the S&P to test this high right here. This is at least I feel like we're coming down here. So my price target for the S&P right now is going to be about like $3,980. You could say conservatively $4,000. I think we're coming down to at least $4,000, like maybe tomorrow, to be honest. But my short-term price target, if things get really crazy, short-term price target for the S&P is, as you guys know, a very technical TA 101, just chart reading 101. Test the high prior to the rally that we're currently on. So this was like the last high prior to this pretty much current rally before going sideways. This sideways price action right here, you guys, also like the short-term resistance on the sideways, pretty much sideways ascending channel, is also something that led me to believe that things were looking toppy. Volume was dissipating. Investor sentiment is obviously slowing down, and in a bull market, when investor sentiment slows down and volumes declines, that's usually a sign that things are getting toppy. Okay, so again, not surprised to see this sell-off. First price target is going to be here once again at the initial high prior to this rally that began technically on March 25th at the end of March. But ultimately, you guys, I would not be surprised in the slightest if the S&P executes from its current level over a 12% correction to test this high back here. So this high was actually one of the initial highs from the, as we zoom out more, you guys can see how staggering this chart is. So this high is going to be my first target right here, or like my second target, I guess. I would not be surprised at all if the S&P does come down here. I'm actually kind of expecting it, but this would bring us down to $3,600. Same principle right here, a high right here. After we broke through this, that's when we began kind of that very clean ascension up. Okay, so went sideways here, broke above that, started that ascension, and I do think that this investors are just looking at this, right? Like traders, technical analysts, quants, algos are looking at this area. So I'm gonna say my conservative price target for for this short to medium term correction in the equity markets, in this S&P 500, I'm sorry, in the SPX specifically, is going to be 3,600. I think worst case scenario for the S&P is to match February, is to match winter of 2020's highs. And again, more money's been printed. This is asset inflation at its finest, but it wouldn't surprise me at all, just all things considered, if the dollar really does start to press on, and we'll get to the dollar once again, to see like a $3,300 to $3,400 S&P 500 or SPX. So again, you guys, a lot of this is kind of bridges we'll cross as we come to them, but short term, by the end of next week, at the very least, I think we will see at least like a 3,900, 3,950 S&P. If things get really shaky, I wouldn't be surprised if by the end of May, we see a $3,600 SPX. All right, so that's the S&P. Let's move on to the Nasdaq real quick. Nasdaq, mentioned this in the newsletter this morning, is pretty much just an amplified version of the S&P because it's so tech weighted, and obviously tech names, the tech sector has been doing so well. And just again, kind of back to the basic physics, because everything, again, like life, the markets work as well. Markets work in cycles, life works in cycles. Markets follow physics as well. The higher you climb, the harder you guys know the drill. So again, Nasdaq is actually even a cleaner read than the S&P because it was in such a strong, somewhat short-term uptrend beginning at the beginning of March. This orange line right here is a line of supports. It did break that. As we saw its first sell-off on May 11th, was that just a couple days ago? Losing track of the days at this point. But again, I do think that this is just a dead cat bounce right here. Like, again, hard fall, hard bounce. I think it's very likely that we're on our way back down. Did close the day with a red candle, which is somewhat telling. And I do personally think that we will, at the very, very least for the NASDAQ, see from current levels. I got to change this a little bit. So from the exact current level at around 160, I think we're due for at least a 10% correction from here. And that's only my first level. I think that's honestly very, very likely that we see that, just because it acted as such a significant ceiling prior to breaking out. Once again, this line of resistance did act as support, this ceiling and floor right here. So I do think this will come into play again. After that is going to be kind of similar, like just similar, again, ceiling, floor. I do think after that, the NASDAQ could definitely come down to 135. And keep in mind, you guys, I'm looking at NDAQ. You can look at triple Qs, whatever NASDAQ thing you're looking at, but I'm using this. We're from current levels to kind of my absolute downside price target for the NASDAQ. We're looking at about a 15 to 16% correction. So conservatively from here, I'm going to say we are going to see a 15% pullback in the NASDAQ. And again, shout out to the newsletter, you guys. Shout out to the portfolio group. You guys know exactly how I'm directly hedging both the S&P and NASDAQ at this point, and playing the VIX, playing calls on the VIX as well. So let's move on to the VIX, the volatility index. Again, inversely correlated to the S&P. The VIX really living up to its name of being highly volatile. So again, what I'm seeing here, you guys, is pretty much just a series of higher highs and higher lows. On the short term, we saw a break of this channel right here, very bullish. Came down, tested the channel a little bit again. This is a pretty messy channel, but the VIX is a pretty messy asset, or just like index, I guess you could say. But from a general perspective, higher highs like high, low, higher low, established a higher low right here, technical higher low, close the day a little green, close the day with a green 4-hour candle, opposite of course of the SP NASDAQ. And I do think it's likely that pretty soon, let's do the B day, because I got some calls and a massive position on VIXY. So let's hope for the B day, May 19th, we see like a $32, $33 VIX. Let's do a quick price range on that, guys. So price range from where we're at right now to, let's just do right there, is going to be a 42% increase. So if the VIX increases by 42%, it's pretty likely to me that VIXY could increase by like 40 to 50% as well. So again, very exciting price potential there. If we break that, then things could get really crazy. The VIX is known in the past for, let's go to the daily, and I'll show you guys what the VIX did in the black swans. So this is the reason for that price target right here. Very solid line of resistance on the VIX. VIX is notorious for seeing these massive spikes up. This is what it did last March right here. So last March in 2018, during that black swan event of COVID, we saw an 85 VIX, which is insane. So this shows you the potential it has. It's very unlikely that that happens again, because a black swan is pretty unlikely. But again, you guys, at all times, it's pretty important, in my opinion, to keep at least a small position in VIXY or whatever ETF you choose to play the VIX. in your portfolio, just in the case of a black swan event. But again, unlikely, but I do think that like 32, 33 bucks is very likely. If we break this, that could get really exciting as well from a technical perspective. So let's move on to the DXY. On the daily charts, you got like, I mean, just looking at this, I do think the DXY is playing out a pretty massive megaphone channel. So let's kind of play out both sides of this. Obviously, megaphone channel for obvious reasons, the good old megaphone. DXY did break. So starting here, once DXY peaked out at the end of March, test the top side of resistance on this megaphone pattern. We did start a very, very strong downtrend. Broke that fair. Like, this is pretty staggering price action for the dollar, but it makes sense because money was being printed. Broke above that, bounced up, saw a nice, very, very significant daily breakout. It's a big move for the dollar once again. Went sideways a little bit, came up, created this mini descending megaphone channel right here. Came down, tested previous resistance as new support, came up, tested that again, which is where we're at right now. So tomorrow, pretty much tomorrow, if the VIXY has a green day, you know what, we can do that just to play it safe. If the VIXY does break, not just very conservatively, if DXY gets above $91, then that signals a short-term breakout. The daily stochastics, the daily Stokes are looking really good as well. So it would not surprise me to see a breakout. If the DXY, if the dollar, if rates rise, if the Fed does get a little sus and thinks the markets are a little too hot, which I'm hearing banterings of, they will raise rates. And raising rates obviously raises the value of the dollar, okay? Because that means the dollar is of more interest. That's not, a little pun there, but the dollar is more desired if rates are being raised, okay? So from a technical perspective solely, if we do break $91, that will make me bullish. And best case scenario for the dollar, let's just do it. It's very unlikely this happens this fast, but let's just do mid-June, so June 15th. Say this plays out over the course of the next month. We could see like a 96 DXY, which would be staggering, but we've seen it before, and this is a crazy market. And summer is notoriously bad for equity indices and just all the things that I've been mentioning for the past week that I really don't want to repeat, but I have been pretty much. But it's because I believe it's important. So, again, DXY, if the DXY starts to rip, then everything else is going to start to dip. So, that does seem counterintuitive to what I'm going to talk about silver, because again, legacy inflation hedge. Silver does look good to me right now, just because silver is in like the most beautiful ascending channel I've ever seen, following a long-term breakout, very strong breakout right here since the beginning of April. Been in this very beautiful like textbook. If you wanted to Google ascending channel, this is the exact chart you should include right here, because this is a textbook ascending channel. So for months now, I've been following a beautiful ascending channel. Just tested the bottom side of this channel yesterday. It's likely to me. As far as a risk reward perspective goes, unless silver breaks it significantly, which we have seen before as well, so be careful there. I just think silver is well poised. Silver and gold both had an amazing summer last summer. Equities are notorious for having bad summers. So it would not surprise me at all if silver and gold both did see a nice little comeback. Silver and gold's time to shine, as I say in many of my Friday sponsored videos. But it's because I do believe it. I do believe history could rhyme here. And I do believe silver, from a technical perspective at least, is likely to come up to test the top side of this ascending channel at the very least. But when the more time something spends in an ascending channel, the more poised it becomes for a breakout, just because it's not a breakout or a breakdown, to be honest. But all things considered, I think silver is more poised for a breakout for all the reasons that I just talked about, okay? So I do think that silver could see $30 over the coming month, like maybe by the end of the month, definitely over the course of like June. I think silver could see $30. If silver breaks its yearly high, if silver can break $31, I do think silver could rip up and slowly make its way to all-time highs. We're not going to cover that right now, but if silver does break $31, I'll just say this right now, things could get very, very exciting for silver. Okay, so that's silver. Just had to include that because I feel pretty good about it. Again, especially if tech continues to sell off, especially if high risk, very high market cap assets like Tesla continue to sell off. So again, Tesla does consume 1.5% of the S&P 500. The S&P is market cap weighted. Tesla has a massive market cap. What's Tesla's market cap currently sitting at $550 billion. So that's a pretty penny right there. Obviously, Tesla sold off a lot, but something very, very, very important to look at here is that Tesla just yesterday, or I'm sorry, on May 11th, I guess technically, broke a very, very, very strong line of support. So Tesla is very shortable right now. Tesla, like all traders are looking at this. This is a very strong line of support. Again, dating all the way back to August of 2020. Touch point here, touch point here, touch point here. Confirmed trend line. And I believe that at the very least, Tesla will come down to about $500. So you're looking at another like 10-15% correction from here. For all the reasons I just talked about, the S&P, the Nasdaq, these same like just previous highs, you guys, previous tops, previous areas of resistance and support, of ceilings and floors. So first price target for Tesla is going to be 500. That's a very solid psychological even as well. I think that's way, way, way more likely than not. Again, you guys, I love Elon Musk. I love what Tesla's doing. I support all of it, but I also, again, am a self-proclaimed rational trader, and technically this looks bad. Tesla, I mean, the numbers out of Tesla are still bad. The optics around Tesla, from a PR perspective, like the cars are still great and stuff, but sales down. I mean, the Bitcoin stuff sucks. Everyone's mad at Elon. And yeah, it's all nothing. I can't find a bull argument right now for Tesla, aside from the extremely long-term one. Long-term, still very, very bullish on Tesla. Short-term, like I have been for this entire time right here. Even back here, I still think it's overvalued, which is why I do think Tesla will ultimately come down to about $360. You can mark that, but I do think that by the end of June, Tesla will be at $360. So $360 price target for Tesla. Market. Close it out with Bitcoin. Bitcoin looking pretty good. So Bitcoin floating directly on top of previous support, new resistance. So Bitcoin, again, very, very strong, very strong line of support that Bitcoin did break, closed a daily below it. Very bearish. Bitcoin currently sitting on this bounce directly on top of it, which I do think, again, probably right now, by the time I post this video, I wouldn't be surprised if this starts to sell off again. But Bitcoin, again, love this asset. Will hold a significant amount of Bitcoin forever, especially in the BlockFi account, blockfi.com/Royce, for up to a $250 bonus. Not even doing a plug right now, just had to do that. But I do see more downside ahead for Bitcoin. Again, same exact argument that I just made for Tesla. A very, very significant line of support on the long term, on the overall uptrend, was just broken. And as a trader, again, from a technical perspective, this market is very technically driven. It only makes sense that we see more downside. So again, same things. High right here, initial high, broke through that, went absolutely parabolic. High right here would take us down to about $41,000. Almost got there, got down to about $45,500. I think we'll come at least down to about $41,500 from here. And after that, if we break I'll just say $40,000, then things could get pretty ugly. I will say that we're definitely going to see some resistance around here. I would say like right here, kind of set a lower high on the over. I mean, not a lower high if you consider this all one big high right here. So again, like high, low, high, higher, low. Maybe this area comes into play. So I'll thicken that a little bit so you guys can see it thicker up. So I do think this could come into play as well, like 32, 33K. Fundamentally, you guys, again, long-term Bitcoin bull. I still think Bitcoin will have a $10 trillion market cap at some point. Match up with gold, which would be over a 10x from here, which would take us to over a $500,000 Bitcoin. Go check out my I think Bitcoin versus gold video that I posted a while back, or Bitcoin like $500,000 video. I do rationalize it a little more in that, but again, long term, over the course of the decade, I think Bitcoin can at least 10x from current levels, at least see 500K, maybe $1 million over the next couple of days, maybe 5 years, maybe over the next decade, it 20x as it gets to $1 million. But again, that's how cycles work. Again, I've lived through many of these cycles, you guys. Not fun to be a bear, but you just got to be objective. And worst case scenario for Bitcoin, I'll say if I don't know if I'm buying Bitcoin at $41,000, if I'm being completely honest. I am buying Bitcoin though at 35. So I'll buy Bitcoin at $35,000. I'm a buyer of Bitcoin at $35,000. If we do break that, if we break below, I'm gonna say if we break below 28,000, I think 24,000 is definitely in the cards, like 24.5. $35,000 and $25,000, I'm a buyer of Bitcoin. 35K, I'm a buyer of Bitcoin, and 25K, I'm pretty much putting my entire net worth into Bitcoin at that point. Okay, so we'll close it out on that happy note. Long-term bull, short-term bear. And again, you guys, that's just the game. You got to stay rational, do your best to adapt to the times, do your best to adapt to the market environment. And although it's not as exciting, that's just the reality of the game, and it will pay off long term, paying attention to stuff like this, even if it is boring. So we'll call it there, you guys. Please let me know what your thoughts are on any of the assets or equities or ETFs, whatever we talked about today, how you're hedging your portfolio personally if you're bearish. And yeah, let me know if you're sticking around. Throw the 100 emoji down below. Do my best to give you a heart. And please give the video a like as well, because again, for selfish reasons, it would make me more excited to post videos. I mean, there's way more of you that give it likes, and I'm very thankful for all of you. I really don't know. It de-escalated, it declined. Just the demeanor went downhill so fast, and I don't know why that is, but yeah, it happens, and it's okay, but I would appreciate a like. So we'll call it there, you guys. I'll catch you downstairs in the comments, and until next time, always remember, take action, make waves. Peace.